This is an interesting little article. Most appropriate considering today should be Federal Reserve statement. What are you guys doing, FOMC? You raising rates? You actually gonna do more QE, or are you going negative? What's it gonna be? What's it gonna be? Gold thrives in rate hike cycles by Adam Hamilton. Gold's deep new secular lows of recent weeks are fueled by American futures speculators' overpowering fear of Fed rate hikes. I'm going to stop there for a second and say, and just who are the speculators? 90-something% is the big banks. So it's not like, future speculators, as in like the whole world's trading futures contracts and we're getting nervous, so we're going to start selling off. No, it's the banks. Of course, they may want you to believe that, but the article is still relevant. They believe zero-yielding gold is doomed in a higher rate world, so they dumped gold futures at astounding record rates. The problem is history proves just the opposite, that gold tends to thrive during Fed rate hike cycles. This revelation is a super bullish near-term omen for gold. Some brief context is essential to frame gold's apparently dire predicament today. Late July saw gold crushed to new secular lows by a record extreme gold futures shorting attack, brazenly executed to blast through long side stops and foment panic selling. But this burst selling soon fizzled, leading to a major gold bottom in early August. Over the subsequent few months, gold carved an impressive new uptrend. By the middle of the day on October 28th, gold had climbed all the way back to near 1182, which was 9% above its artificial early August low. But that very day, the Federal Reserve's FOMC, which is the Federal Open Market Committee, that makes monetary policy through the markets an unexpected curveball. No, it was expected. The club knows what they're doing. The FOMC inserted a surprise statement. Warning, whether it will be appropriate to raise the target range in the next meeting. This shocked traders, as it was the first time the Fed made a direct reference to a possible imminent rate hike since it first implemented its zero interest rate policy ages ago in December 2008. This catalyzed the already bearish American gold futures speculators into selling with reckless abandon. Again, it's not the futures people, it's the banks selling. But the news will have you believe, oh, gold sold off today, like a bunch of people got wise and sold it, together, collectively, No, it's the giant banks who own all the damn contracts. Starting that very day, gold would fall for 14 of the 15 trading days for an 8.4% loss in just several weeks. This gold futures selling was off the charts astounding, occurring at extreme record rates far beyond anything ever witnessed before. That span since the Fed's hawkish late October surprise saw the most single-week speculator gold futures short selling ever by huge margins. Multiple week records of gold futures selling by this same group of traders, and then let me tell you who the group of traders is, the banks, were also shattered, as explored in depth in my essay last week. American future speculators wreaked havoc on gold since that last FOMC meeting because they are utterly convinced the coming Fed rate hike will devastate gold. That's the impression they want you to get. Their thesis sounds logical on the surface. Gold yields absolutely nothing. So as rising rates force yields on bonds higher, investors will abandon gold to migrate into bonds. The higher prevailing interest rates, the less attractive gold will be, supposedly. Nearly all traders take this rate hikes will doom gold outlook as gospel today. Again, who are the traders? The banks. But it is fatally flawed on a blindingly obvious front. Gold has always yielded zero. yet it still powered higher in gargantuan secular bulls. Between January 1970 and January 1980, gold skyrocketed 2,332%. Over that exact span, the benchmark federal funds interest rate, the Fed targets, averaged 7.1%, compared to zilch for gold. Then between April 2001 and August 2011, gold soared 640% higher. Despite the advent of zero interest rates back in late 2008, the FFR, or the federal funds rate, still averaged 2.1% during that span, with gold enjoying gargantuan secular bulls that greatly multiplied investors' wealth in far higher interest rate environments than today's. It is readily apparent gold isn't valued as a yield play. That whole idea is utterly nonsensical for an asset paying no cash. Because it yields nothing, gold is often derided as a sterile investment. But that is rather ironic, since that definition includes all stocks that don't pay dividends. Saying gold is doomed in this next Fed rate cycle is silly. It's just as silly as claiming wildly popular zero-yielding stocks like Facebook, Amazon, Netflix, and the company formerly known as Google will be obliterated as investors flee them to buy higher-yielding bonds. Investors have flocked to gold for millennia for the same reason they buy stocks, because they want to buy low to later sell high as demand grows. American future speculators' contention that sterile gold is somehow a yield play is utterly absurd, both historically and logically. Gold is similar to any stock that doesn't pay dividends from an investment perspective, a price appreciation play where yields are irrelevant. American future speculators are so whipped up into their groupthink, gold to zero hyper-bearish frenzy that they can't see this truth. The gold price impact of their resulting extreme record gold future selling has been so dire that investors have fallen into the same mental trap. But the prudent investors and speculators transcend herd emotions to study how gold actually performed during historical Fed rate cycles. And so far, gold has done unbelievably well during those cycles. Now, I was going to do this video, and said, as I woke up this morning, I said, this will make a good video to talk about, considering the rates, maybe, we're about to find out the rates are about to rise. Except I realized after I got up and was getting ready, I said, man, today's actually the day. Today's Wednesday, so we should hear what they're going to do today. So whatever the Fed decision makes today, I don't want to do this video and upload it tomorrow. I need to upload this today. So I already got 3 videos, as you'll see by the time you get to this one, most likely. But the good news is they're pretty short. The first 2 are pretty short, and the third one's maybe 16 minutes, and then however long this one is. But yeah, I felt it was a little more important to do another video, because today is that day. Today is the greatest FOMC day. So we will see, right? We're about to find out. We've had Bitcoin above $408 for honestly a pretty unbelievable time frame. Even though it hasn't been super long, you have to look back and say, well, why is that even important? The Webbot report was calling 2 months ago easily. Matter of fact, that was close. I think it was September, October, November, December. Yeah, we'll just call it 2 months. I don't know the exact date, but 2 months ago, we had the Webbot report say that Bitcoin, which was sitting at around 240, 250, 260, 250, 240, for a while. Hey, get ready. We were expecting Bitcoin to go over 408, and it should do it 3 times. It looks like it'll do the final one whatever, late November, we should see this action, and there'll be the final move above 408 where it stays there. So sure enough, and it was more like just after the first week of November, or right around the first week of November to the second week of November, oh my God, Bitcoin screams up past 250, 60, 70, boom. Oh my God, it's above 408. Holy crap, it was at one point touching 500, I think. Then it came back down, and then it went below 408, right, going back up and back below, and it kind of sat below for a while. A while as in, week and a half, 2 weeks, maybe. Let's see, it was middle, no, more like 2 weeks. And I said, look, again, I'm talking with Cliff I too. We're expecting that one final move to go above 408, and then it should hold. So we shouldn't see what it just did. We're at 408, 418, 25, back down. It should stay there and should hold. And I'll be damned. And I'm sure you will too if you've been following the price. It has stayed above the it's been like 450 this whole damn time since this final hurrah for Bitcoin. And you mean to tell me this freaking software webbot thing has said, what the hell, this is crazy talk. Yet it happens. And people think I'm crazy. Every time I talk about webbot, I get thumbs down, thumbs down. Not that I get a lot, but it'll be 15 to 20 thumbs down, when normally I get 5 to 7 thumbs down. As soon as I do a video, there's the shills come in. And it doesn't matter what, I could say, you know what, Jesus came down today, he's riding with me in the car. He whatever, and before you can even press play, thumbs down, thumbs down, thumbs down, thumbs down. We got the shills. Guys like old Connecting Dots, who's got multiple accounts that comes in, and he's probably 5 of the 7, if I had to guess. But at any rate, it is absurd for this damn thing to make such statements, and it's even more absurd for a person to even believe in this thing. Yet, if I see anything that shows me, hey, this thing got it right, this thing got it right again, this thing got that right, I'd be a damn fool not to listen to it. To say, well, what else is it saying? Just curious, what else is it saying? Oh, well, it said, since it got 1, 2, 3, 4, 5, 6 things right in the last 3 months, we're waiting on one final thing, and that is the price of precious metals, and most, for whatever reason, focus on silver, to make a sizable, oh my God, type of move. After we see this little thing with Bitcoin happening. And by chance it has happened, and by chance the final piece of it has happened, which is 408 past it and staying for Bitcoin price. And it's all around the time the Federal Reserve is about to make possibly a historic FOMC meeting today and decision, which, as I've been speculating, and I know some other quote-unquote experts have said, no, they will never raise rates, it'll be QE again, or not even necessarily QE, they just won't raise rates, so they'll have to keep them at 0. But I said, listen, when the club knows it's time, the club makes its move. If it wasn't time, the club wouldn't raise the rates. If it wasn't time for the club to do what they're doing next, they wouldn't raise the rates. So this is not about, well, they can't do it, if they do it, they know the markets are doomed, so they won't do it. You ever thought, has it ever occurred to anyone they want the markets to crash? They want this big deflationary spiral to occur? Look what's already happened in commodities. They've already had the deflationary spiral. All commodities, silver, gold, copper, ore of all kinds, right? I mean, just doesn't matter. But the market itself, stock market, what the hell, ain't no deflationary spiral there. What the hell's going on? Well, maybe because it's next. And it's time. So that they've given their minions, in this case now Janet Yellen, it's go time for the rate hike. So we may find today it's go time for the rate hike. All I know is whatever decision that they make today, according, yes, to that webbot report that's been on fire lately, will be looked back upon in the not so distant future, as in the next few months, beginning early next year, all the way into that time, as that was a terrible decision the Fed made. Wow, look at what it's doing to the markets. That's how whatever decision is made today will be looked upon. So I would say if they keep it at 0, or near 0, like it's been, Why would that look back? Oh, you should have raised the... I mean, like I say, you should have raised the rates in December. Oh my God, the market's crashing because you should have raised it. Doesn't make sense. The only thing that makes sense to me right now is a rate hike. But I don't have a... I was about to say I don't have a crystal ball, but I do have a magic 8 ball. But it's not with me. It's in the house. So I'd love to shake it and tell you what it would say, because it has a better chance of being right than anything else. Just by chance, let me shake this thing. Signs point to yes. You know, ask me again later. Oh, okay, well, now's later. I'll ask you immediately. So, today's the day. We can only sit back and wait and see. And I am curious that once they make that decision, are we going to see an immediate spike in gold and silver? Are we going to potentially see a crashing of gold and silver due to something they said, only to be followed in the near future by a massive rise for some reason? It could go so many different ways. But you've noticed they've got silver down into the high 13s, 1370. Oh my God! You don't suppose they're smashing it? Let's push it. Let's compact. It's not just smash. Let's compact it down because we know it's about to explode soon. Do I need to remind you again of last year, November? The CME group changed the rules for gold and silver to be traded on the COMEX market, in which they put circuit breakers in place. You don't put circuit breakers in place when, for the entire time of the damn thing being tradable for decades, you controlled the price easily because there were no limits like that where there are circuit breakers. You could smash the price, but it was 50. You can smash it down to 40, down to 30, and goes back up. Smash it back down another $5 or $6, no problem. Why weren't the circuit breakers put in then? What happened? Why did they put them in November of 2014? Nothing was going on. There wasn't any kind of major moves in silver and gold. It's crazy. It's super volatile. No. What was going on? Nothing. They put those circuit breakers in place so that they can cap the rise to some kind of controllable, I guess, ability of them. Their ability to be able to control it somewhat. If they know it's going to explode higher, they can't just let it explode to where it's going to go. Because if it goes ape shit, the whole world's going to be like, what in the hell? What am I doing with these bonds? What am I doing? I'm out. I'm going into gold and silver. But if you can circuit breaker triggered, not quite as it could have rose a lot higher today, but it didn't because so many the circuit breakers triggered for the price of silver and gold. And I'm going to say at the same time, if I'm a bystander and I see that circuit breakers were triggered on gold and the thing the media and the mouthpieces keep telling me to stay away from, circuit breakers were triggered because they went higher, that would be telling too. Well, in that case, I'm still going back. I'm still going to get into gold and silver. But they may need circuit breakers put in place so that anybody trading those futures contracts, and if you were short, you had some short positions, options or whatever you may have, and the price explodes higher, these big banks would literally fail because it's leveraged so high they would be finished. So I'm assuming in favor to the big banks, who are the ones who hold all these contracts. They don't want the price spiking too much for any of them who have short positions. Now the other side of that is that we just saw recently that it appears they're starting to go net long. So there's not going to be a lot of them going short, which means what I just said prior almost doesn't matter. All right, you got all we can do is sit back and watch at this point and see, you know, which many scenarios that I just threw out might actually play out, or will it be something completely different that I didn't even mention, didn't even know to think of or say. Don't know. But I do know today's that day. We're going to find out, and if gold and silver don't move yet, based off of the WebBot stuff and it being very, very right lately, it has to be very soon. Has to be soon. Take care. And I say soon as in the price of precious metals rising in an oh my god moment. Take care.